What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, the people's champ of Wall Street, Dave Bartosiak, and today, my friends, you guys are in for a treat for many reasons. First, I got Led Zeppelin blasting in the background, so I'm screaming at the top of my lungs. Two, I recharged my soda stream, so I've been pounding energy drinks all morning. And three, I had a 2 for $20 at Applebee's. So everything is firing on all cylinders right now for your boy. Today we're talking about JD.com, and if you haven't heard about it, allow this to serve as an introduction. You know these Chinese companies, it's like, I don't even know what do these guys do? And then everybody's all like, oh, they're the such and such of China. They're the this in China. There's the that in China. They're the, you know. So here's an easy way, right? When you look at something on a company and you're like, what the heck? I don't know what this is. So just go over to your Zach's, right? Pull up your detailed estimates. Hang on, I'm gonna zoom out. I'm gonna go big for you guys here, right? You go to your quote overview, that is. Sorry, I'll go back small. Okay. Your quote overview. And then off to the right when you're in full screen mode, I'm in like a weird mode here. You get this little company summary here, all right? So, company summary, direct sales company, online direct sales in China. Okay, so mobile apps, computers. This is great too. Look at this. Company through its website offers a selection of authentic products. Good, because I was worried. So they're, you know, no bootleg stuff here. We said it in our company description that they're legit, so they have to be legit, right? So they sell a bunch of stuff online. JD.com, right? All right, so there you go. So if you're ever looking at this at any company and you're like, man, what the heck? What is this? That's how you figure it out. Okay, you just got to go that. Let's see, the usual suspects. Kurt, how you doing? Bruno, all the way from Portugal. Mike, welcome. Hefe, what's up? Wild Bill with the yo-yos. Mr. Williams, how you doing? There's Dean. Dean, where you been? Where you been, buddy? And then Trevor, of course, my friend. Trevor, what's up? All right. Very appropriate, Bill. Very appropriate. We're going to dig into a lot of things today. First thing I got the streams good on this end, man. I got all green on the screen here, my friend. All right. So, a couple things I want to do. First, before we get into this too much, before we even get into JD, let's look at the Nikkei. How do I got Nikkei in this? I had Nikkei. I know I had this on here before. There used to be a Nikkei on this thing I could do. It's just like Nikki. Oh man, I'm struggling here today. Where's my Nikkei? They used to let you pull it up. Huh. Nikkei. You used to just do that and there it was. You got index funds? I don't have my Nikkei on here anymore. This is stupid. Anyway, whatever. Oh, that's not going to work. I can't believe I don't have the Nikkei on here. That's just going to upset me now. So we can do this. We can use this kind of closed-end fund. So pretty much this is what happened, guys. This is the long and short of it. There was a big fib that got hit in the Nikkei overnight. And then when they hit that fib, woof, that thing got flushed. Then it bounced back up. So what I'm thinking, my thesis for the day is major Nikkei fib gets hit, algos come in, sell the Nikkei, and then the programmatic selling happened this morning here in the U.S. That's what I think it is. People are like, tax plan, no, I don't buy into that stuff. When they come in, when an event happens, and then the media scrambles to try and figure out what caused that event, and doesn't actually report on the event and think about the event, I'm not buying it. Just not buying it. So, oh, market jitters over worries of tax plan. No, absolutely not. We know what happened. This is a technically driven move, and that's what's up. And look at intraday. Intraday on the S&P. This kind of fits my thesis, my friends. So overnight, boom, they hit them. The risk-off stuff comes in. You get your rope-a-dope, and then you got bid here. I'm going to come on a limb and say that the S&P 500 trickles on up throughout the session, retest the highs, if not better. That's what I think happens. We'll check in on that at the end of the session here, but let's get back to the task at hand, and that, my friends, is JD.com. So let's go and kick things off how we're supposed to kick things off, and that's the price consensus and EPS surprise chart here on Zacks.com. So recent IPO, you're talking 2014, and the black line corresponds to the right y-axis, which is price. The green arrow's earnings beats. The red arrow's a couple of uggos right there. Our earnings misses. The left y-axis corresponds to these multicolored lines, which represent the evolution of our Zacks consensus estimates over time. And you can see a whole lot of ugliness going on here. Whole lot of ugliness. So estimates to the upside that trickled on down, whipsawing and estimates and all sorts of just nastiness. Not what we want to see, guys. When we're looking for these on these charts, we want this nice little stair-step pattern that's going up. I'm listening to Zeppelin, of course not right now, but we've been listening to Zeppelin this morning, so a little Stairway to Heaven action, my friends. But that's not what we're getting over here. This is just like squiggly lines. This is what happens when you give a 4-year-old a crayon. You just chop them, chop them, chop them, chop them. Kiran Kumar Gangaraju. I did my best. I hope I didn't hack your name up. Shoot me an email, livetrader@zacks.com, and that's how you get on the list, my friend. Livetrader@zacks.com. We'll put you on the distribution list. So, Kiran Kumar Gangaraju. Officially, you have my new favorite name, my friend. Way cooler than Jeff's name or Trevor's. Wild Bill's got a pretty cool name. Way cooler than Bartosiak too. I don't know. Bartosiak is starting to grow on people, I think. Every day, not every day, almost every day. Every day we're doing something. Every day I'm shuffling. Okay, so what are we going to glean from this, guys? That they can't be trusted, that these EPS numbers aren't quite mature enough. Something's getting lost in translation, and that's causing this choppiness. And that's why you're not mentioning JD.com in the same breath that you're talking about Alibaba, right? Or even Weibo, for that matter. You just got some nastiness, some nasty choppiness, okay? So what's this choppiness doing? Tej and PJ have good names. I agree. Choppiness. But there's been a little bit of consistency here recently, and look, they've rewarded it. The investors have rewarded this behavior, so this is a good thing. All right, now let's take a look at the detailed estimates page here on Zacks.com. Zacks ranked number 3, hold. That's probably because there hasn't been too much going on, but look at this. Value, D. Growth, D. F of D. Kurt, you having flashbacks to high school? Report cards? Just playing. I thought you said you're a musician though, right? So I thought you'd be good. You'd be used to having bad grades. Next report, the report after the bell on the 13th. Well, before the bell on the 13th, rather. So we got the rest of the trading day today. We got all tomorrow and figure out what you want to do into the weekend. I'm just joking with you, Kurt. You know I'm not. I just throwing stuff out there, buddy. All right. Let's look at the revenues here, because this is what matters, right? Revenue growth, 34.57% for the current quarter. Next quarter looks like 38.87. Current year number, 39.48. Next year, 29.38. So these are some big numbers. And look, it's not a tiny company. You're talking $54 billion in sales for the current year, $70 billion in sales for next year. Still decent numbers, really decent numbers here. How does that translate over to EPS? This is why you got the Chop City, the Chop Suey, and the Chop City. 244% EPS growth for the current quarter. That's only a dime. Next quarter, 2% growth, also a dime. Current year number is going to round out 45 cents with 306% growth, and next year 108% growth to the 93. So this is really what I'm more impressed by, is the 45 to the 93 than these bigger percentages on lower numbers, right? You're not impressing me with that so much. There you go. Well, hey, you know, that's all right, man. It doesn't matter, you know, how you start, it's how you finish, right, Dean? So this is why it's a 3. Nada. Nothing going on here. Just Zeroville. That's why it's a 3. So we base our Zacks rank on these analyst estimates. So if you had a bunch of analysts who have come in and increased their estimates to the upside, that's going to put you in the favorable eyes of our Zacks rank. If ain't nothing doing, we're not going to do anything either, and it's going to make it a number 3. So don't look at the 3 and be disappointed. That just means that analysts really haven't done much with regards to JD. I also think that having some detailed analysis on a stock like this that is a number 3 is a great idea, right? Because this way you know that there's not a ton of analyst coverage. And in Hefe, you're hitting on the head, man. It's the new sleeper, perhaps, right? Not all the eyes aren't on this company yet. So if they can deliver some solid numbers, you might be in ahead of a serious trend here. So there's actually been a shift in their EPS estimates, even though analysts haven't done anything, and that's because old estimates fall off in this case, and then this ticks up. So it's ticked up from 9 to 10, 8 to 10, 39 to 45, 91 to 93. So at least they're moving in a positive direction, so that's a good thing. Let's look at the surprise history. 2 cents last quarter, 13 cents before that, 11 cents before that. So they've done a decent job of at least beating these estimates coming in from analysts over the recent history. Okay, let's look at the chart before we get into other stuff. And it's 2 separate worlds here for JD. There is the pre-move JD and the post-move JD, and we are going to make this distinction. New world, okay? You can see here just from the volumes. Always put these volume and price indicators up there because things will start to make a little bit more sense when you do so. This way you could see where the battles have been in the stock. So obviously a lot of price action down here, and that's why I said the before, right? Then you have this trough in volume, and then people really started to mess around as it's been chopping in this area, okay? So we've already started to get into this gap. And look at this. Look at this. Nigerians, we're talking about it. You know I'm a big fan of the Nigerians. One day, I actually have seen Dr. J on the street in downtown Chicago. He was in front of a Dunkin' Donuts at 9 a.m. I just yelled, "You the man, Dr. J!" And he was like, "Yeah!" And that was it. Great story, I know. But he goes to the SIBO all the time, and I've been asking my people to hook me up when I'm at the SIBO, when he's at the SIBO, and then they never hook me up. I'm gonna change that. Couple of things here, guys. So the gap, right? So the top end of this gap is going to be support. I bet you that's right about there. And then now look at the 200-day moving average coming into play. I had it in Thug Pink for Wild Bill. So that's what we're keeping. Now look at this. This is the 50-day. So the stock under pressure. Don't get a GTC Lusso. We're going to have to talk cars later, but don't do a Lusso, man. No. No. Don't get me talking Ferraris, man. I'm going to get all fired up here. Get an older, go older. Go a little further back. Get better deal. Buy these Ferraris after they've already depreciated and hit their bound. Don't pay for all that depreciation. It's crazy. 200-day and the 50-day, right? Now, they ran out of steam ahead of the 50-day here, and that's fine. This is going to make sense. And the compression that you're having between these two. How many of you guys mess around with Bollinger Bands? That's awesome. Hey Jeff, I'm gonna go on a dating site and find you the prettiest ugly girl on earth too. The fastest station wagon ever created. I mean, come on. I don't know what's with you millennials and these station wagons. Like, maybe you watch too many. Ooh, the Aperta. Talk to David. Hefe, talk to David. He's going to fix your Ferrari situation that you got going on in your head. So, if any of you guys trade Bollinger Bands, right? What you know is that as two bands start to crush into each other, right? They get closer and closer. Then there's a higher likelihood for them to pop one way, one direction or the other. It's pretty much what ends up happening. And I can show you guys that here too. The same sort of thing is happens when these moving averages tend to converge, okay? Ahead of earnings reports on a higher beta stock like this. So what we're gonna do is we're gonna pull an audible. We're gonna get rid of the thug. You know, I'm gonna leave the thug pink actually because it's just fitting. And we're gonna put on the Bollinger Bands here. Boom. And we can go back. We're going to pick other stocks to show you, but we're going to do it on this also. That times when the Bollinger Bands start to get closer together happen right before, whoops, moves, right? Because what's happening essentially is the market is getting closer and closer to a compromise. Let's say you got a bunch of people saying, we're up here, and a bunch of people down here saying, no, we're down here. And they're fighting the battle. And as the two of these guys are duking it out, it's getting closer and closer to the middle, assuming they both have the same amount of firepower, right? Does that make sense? If you got one person with a certain amount of strength and another person with a certain amount of strength and they're arm wrestling and they both have equal strength, odds are they're going to be in the middle until somebody gives up and then it's going to go. Same kind of thing when you talk about Bollinger Bands. These are going to tighten, and this tightens as a function of statistics, basically, when this range starts to drop. And then, boom, there's a likelihood that it moves. So, the same sort of thing can happen with moving averages. Now, a couple of Captain Obviouses out there are going to go, yeah, but Dave, look, it's moved. It moved up here and then it moved down there. Like, it's not that far apart. And I understand what you mean. But choppiness still breeds breakouts. Okay? So not tunneling enough. I'm going to argue not tunneling enough for a unilateral breakout. Or I don't even know if that was the right word. Well, that might be the word I'm looking for. Where it's just like, I got to go somewhere. We're going to talk about this in a little bit more depth. But anyway. So with Bollinger Bands, do it. And I'm going to say the same. When these moving averages, it's also kind of thing. See? This was an area where we knew this tightened. And these bands get together because somebody has to win. And then a trend develops. Right? So right now what's happening, people are giving up here or the bears are rushing in. Right? We do have a series of lower highs here, which is bearish. We actually have a downward trend channel right here, which is bearish. You guys see that? You have this big chunk of volume here. So the market point of control is right around where we're at here. 200-day. What do I tell you guys about the 200-day? For a stock to be trading underneath the 200-day, Trevor, you don't like the Thug Pink? Fine. Here, I'm not going to make it less pink, but I'll make it bigger. How about that? We can compromise. Can you see the Thug Pink now? So remember what we say about this 200 day. You better have a darn good reason to be trading underneath the 200 day if you're a stock, right? The enemies better be at the gates. There better be something that's breaking down fundamentally that's going to cause you to trade below that 200 day when the market's up at all-time highs, the NASDAQ's rocking and rolling, and everything seems to be going okay, right? So there's that. One more thing I want to draw here on this chart before we go on to the rest of this analysis. It's good old fibs. We could draw big fibs from down here. How many people are surprised that the move from here to here ended up hitting a 50 fib there? Probably not too many of you. So that means we got a little bit of resistance here, 43s. Let's keep this 43 here in your head, okay? Keep this level, 36, and then down here, 33, should this move continue. So 3, 6, 43, then obviously this high here, 45, 60. All right, just depends on how much madness he wants. Bill, I drew your downward trend channel. I drew your downward trend already. Now, if you want to go, you wanted me to do this big wedge, don't you? Is that what you wanted, Bill? Did you want the big wedge? You ever play Trivial Pursuit? Orange for a wedge. I'm assuming that's what you're looking for. I'm more of a fan of trend channels. So it's the same thing. I mean, Bill, we're getting to the same conclusion. Pretty much, right? This is a downward thing. Now here's the thing. Should this break out to the upside, it ain't going to stop here. It's going to go much higher. Should it run out of gas, it's going to get down to the bottom. This is not going to be yes and yes. Okay. This won't be the support level for it. It'll be all the way down here because that's where the bottom end of the trend channel is going to be. And Bill, to your point, that's why I didn't do the wedgie first. Because I knew this trend channel was going to set up down there. So 33s. 33, mid 33s. That handle we got to look at. Okay? Okay, lots of numbers. Lots of numbers. Let's look at some real numbers. So we're trying to put together either a bear case or a bull case. So the bear case would be these numbers aren't going to be as good as they think it's going to be and things are slowing. The bull case being just the absence of bad numbers, I think. The absence of that evidence would be bullish, given the retrace from the highs. Revenues, 44.64. This quarter, they're looking for 12.25. Look at next quarter, though. Next quarter, they're looking for 16 billion. Do the math on this. 16,052 year over year. That's coming from 10,173. So that's 57%. So that's a pretty big number. How's that going to translate to EPS? EPS numbers are a lot more. See, I thought we were looking for, were we looking for a dime? Ah, that's why. Okay. So these are still. So guys, we have a couple of things. At times there's discrepancy between what we see here and what we see on the site. That's just based on the way we calculate EPS in ZRS versus what we see on the site. We take out options that they're giving away to people in this calculation, but now we stopped doing that on the website, so that's why you see this kind of stuff. Anyway, that's my disclaimer on why this looks a little different. What's not different is the actual growth numbers. But don't worry about, again, these growth numbers mean nothing to me. Because if you're losing money and then you're making, or, so flipping back and forth, it's... Anyway, so I'm not gleaning much from this, is what I'm saying. Valuations, definitely going to be a price to sales kind of deal here. Don't even care about the forward 12, the forward PE. Don't care. Sales. Sales is what's going to count. Is this a surprise for anybody? Because this is a shocker for me. So where the S&P 500 trades over 3 times price to sales, you're under significantly here with JD. Talking a third, less than a third of the market's valuation on a price to sales basis. That's a good thing. One thing I've learned from Matrix is that price to sales matters, and you should be looking at companies with lower price to sales, ceteris paribus, right? If I'm looking at 2 companies with the same PE, same sort of growth numbers on that end, same sort of revenue growth, and then I look at the price to sales, pick the one with the lower price to sales in that situation. So I'm surprised by this. And here again, we can enter some tickers to do some comps. Alibaba, almost 10 times. Amazon, 2.3 times. This is a 2.2. I feel like these numbers, remember we were having trouble with these numbers before? I think it's where it is on the chart, actually. So maybe this is actually 1.3. I need to get some clarification on this because, yeah, I think this is the current. It's actually 1.3, and this number's wrong. I got to double check that. Anyway, regardless, a fraction of where Amazon is. What do you guys want to throw out there? Throw out some tickers. eBay. See? Baidu. So, from a price to sales perspective, given the revenue growth that we're seeing, this thing's on sale, my friends. What do you think? Is it on sale, or am I losing my mind? I think it's on sale. Perhaps. Let's look at the detailed estimates page. Consolidated surprise. Baba, yeah, I got the Baba. Here's when the delay stinks. I got the delay. We'll see. 2 days before to 2 days after earnings, that's what this gives us, right? -4 last quarter, 7, 85 bips, 11, 4, -5. Surprisingly, not a lot of activity. I would have expected more movement out of this stock. December, 3.6, September, 8, and then a -8 and a 4. So it's only had one double-digit move on earnings in the history of the stock. All right, let's dig in this options chain. Now for the fun part. So overall, I got to do my my little disclaimer here before we get into some options ideas on this. Overall, if I'm looking at JD as a long-term investor, I like what I see. Given where that price to sales is, that they still have revenue growth, numbers-wise, things seem okay. And I hate to do it, but if you like the stock at 48, you got to love it at 39, right? Although technically, from a technical perspective, this does look like some weak sauce on the board. So next week is what we're going to look at. Good news is these guys have got weeklies, fairly liquid weeklies as well. Let's do the side-by-side view so we can get an idea of what the market is expecting. 39.5 is what we could use. Pull this up here. Okay, good. You see that, guys? My BS meter just goes through the roof. Sometimes I can just tell when bar chart hasn't loaded up, and when it's saying 30 cents or whatever, then I knew it wasn't loaded up. So there we go. I sniffed it out for you, basically to save myself some embarrassment. Oh, wow. I'm going to point out some real obvious stuff, but first let's do this. 151 by 156. Let's just call that 154 is what the at-the-money call is going to cost you. On the at-the-money put side, 161 by 164. Let's call that 162 to make up for it. That's 316 you're talking about on 39. Come on. 39.50. 8% exactly. You're looking for an 8% move here out of shares of JD.com. Now, do you guys see what I see? Do you see what I see? I didn't hit that note, Kurt. Not even close. I couldn't be in the boys' choir. They wouldn't let me do it. That was 39s. We're on the call side. Look at the thousands and thousands of contracts of open interest at the various strike prices. Gents, they mess around with this stock, don't they? Spectacular. So lots and lots of liquidity, which is why it's so tight. Bid and the ask, very tight. Lots of liquidity on this one. Looking good. Stay in this front week. Well, front month, the next week after expiration. And just look at where the action is on the put side. 25,000 at 40. A bit, you think? 5,000 at 39. 37s have 13,000, 8,000 over here. Okay. Now, I will come back to this expiration. Absolutely I will, because it's going to be fun, and I got something for you on that one. But first, we're going to go to the December expiration because, you know, our whole analysis here is essentially based on the, whatchamacallit? What was I talking about? Earnings, right? Or earnings trend. These earnings trends take a while to develop, and they take a while to reverse. So we want to give it some time for that post-earnings drift. Now, we know sometimes the stock doesn't go in our direction and then moves in the opposite way and all of this, okay? So we like to give it some time. All right, so if you're going to mess around in this expiration, unfortunately, you got to either dip your toe in the money by 50 cents or dip your toe out of the money by 50 cents, okay? Now, what I'm going to tell you is just dip out of the money a little bit. It's okay. Not a terrible idea. Because I think by the time this... Let's see, where are we at? 39.30. Yeah, whatever. If you're bullish on the stock, you got to believe that this is no problem. $3. 43. We're going to talk to you about the Golden Cross there later, Kurt. Absolutely. And my answer, the Golden Cross conversation, is sometimes. Sometimes. We'll talk about when it sets up. All right, so I think if I'm looking at this stock and I'm bullish, I need to get rewarded for my bullishness. And if the market's pricing in about 350, I think it does every bit of that, no question. So here's a bull debit spread I want to look at. It's going long the $40 call for 193, simultaneously going short the $43 call for 93 cents. That means I got a $1 holler. How beautiful is this? $3 is the difference in the strike prices. I put $100 down, and I can make $200 on my $100 triple up. I could triple up on this, my friends. I like this. Absolutely, I like this. So bull debit. Long December 15th, 40-43 call spread for a $1 holler. I think that's spectacular. Okay. Now the Bears, also, I think you should be getting debit spreads on, because like I was talking about here, the downward trend channel essentially is going to end up being all the way down at 33. Now you don't have to be that aggressive to get a really good bang for your buck using this put spread, okay? So the bottom end of that channel is all the way at 33, which is quite far. But you can use 40. Use 40 or 39, doesn't matter. So let's do 39. And then, you know me and my famous halvesy. You end up getting a nice little return here. Right here. The December 15th 39 put here is 190. Simultaneously going along that and going short to 36, you're going to get back 75 of those cents. So here it's only 115. A little bit surprising to me, actually, to see that it's a little bit off. So I think there's a little bit more money betting on downside. Percentages are a little different, though, too, so I digress. Difference in strike prices is $3 minus that 115. That's 185. You can make a 115 or 160%. So Bears, I think you should look at this. Bear debit long December 15th, 39, 36 put spread for that 115. Because you got to believe that it gets every bit of that easily. And hopefully more. And obviously you can get even more aggressive if you wanted to go all the way out there. But to get 25 cents, I don't know. I don't know about that. All right. Bull idea, bear idea. Let's go back to this front week, front month. Because they're going to report. I think, and I could be wrong, of course, but of course I could be wrong. This is options trading, for crying out loud, ahead of earnings reports. It's like the riskiest thing on earth you could possibly imagine. I think the trade that pays is the bull debit, guys. Because why are they at the 200-day when they have this growth? And if you look at next quarter, that's when there's a big jump in revenue growth. So we're always looking a little further out, one more quarter out. That's what these guys look for. So I think that's where we're at. But as a one caveat to this, okay, so Roku did well, right? Take-Two did all right, right? Okay? But then, like, I had Yelp and Etsy, some of these other names, where you thought it was okay, but even Take-Two is giving back a little bit today. Did a huge day yesterday. So it's, I feel like in prior quarters it was just all things tech. You could just buy it and not worried about it. And now here in this quarter, like, you better bring it or you're gonna get beat down. But I think for whatever reason, I don't know, I feel like this could be a coming out party for these guys. And I like the fact that they've retraced here to that 200-day. That's just comfortable for me. Another way to play it would be selling a put spread past 36. So I could sell put spreads down in that. I would totally be comfortable with that as well. Less reward there, okay? Lottos. So let's look at this realistically, okay? The stock's at, what is it, 39.50. The biggest move it's ever had has been 11%. That puts you up at 43.80. I think looking at these 42s for 64 cents, somewhere in here. Yeah, maybe even the 43s. Maybe the 42.50. 42.50 for 52? Maybe that's the way to go. Let's do it. Say Lotto is long that November 17th. 42.50 for 52 cents or whatever, 52, 53 in the 50s. I think that's the way to go. Because if they do have the huge quarter, and guys, again, we haven't seen this before, the Lotto that we give at the end is basically, if you were going to go to the gas station and spend $50 on a scratch-off ticket, what's a better idea than that? that's essentially what this is. That's exactly what it is, okay? That's what it is, my friends, okay? Trevor, they report the 13th, right? I'll pull this up. 13th before the market opens. I got no events. I'm a loser. No, I never. The 13th, Monday. So you got the rest of the trade, and that's before the open. So you got the rest of the trading today, rest of tomorrow. Go ahead and figure out when you want to make a move. For you bulls out there, if anybody wants to be a bull, today wouldn't be a bad day to mess around with this thing, given what the market is doing. Okay? Because if you get an overall market that's pushing higher a little bit, could help these guys out. And there you go. So I think the thing about this stock, this is the take. You have this huge move up, and then they had to justify, right? And people aren't quite sure that they've justified their price. That's why you get all this choppiness that happens. Looking for floors, might have found their floor. Twice they tried to find the floor. I just like how the 200 days catching up. I personally believe the buying is going to be to the upside. One more thing I want to check in just to throw a wrench into my own. If this counteracts, I haven't looked at it yet though. Let's see. Click. Shaken money flows. Makes sense. Look at this. Shaken money flows have been negative. Of course. That makes sense. So this all makes sense. So no big and ticked up just a little bit. So all right. So no signal there. Could the market continue to sell off tomorrow morning? Absolutely it could. But look what happened intraday though. Oh man, where are these fibs from? I draw these fibs like years ago and then they linger. Yeah, absolutely. We could sell off into the night here. I thought we were going to trickle on up. I thought we were going to keep trickling up. We'll see. It's still early. So there you go. And remember, guys, the other thing is when you're messing around with these options ahead of these reports like this, you can wait until 10 minutes before the close tomorrow and put your trade on. You don't have to hold it into that because those values are going to stay, because of the implied volatility there, they're going to stay relatively inflated, and you're not hurting yourself or your chances too much by waiting another day. It doesn't really do. Not hurting yourself, okay? All right, guys. Well, I've talked myself blue in the face. I think I covered most of the bases. That's it. That's all I got for you here today on Live Trader. I've got to put together our good, the bad, and the ugly review. So I've got a little bit more work that I have to do. Not to mention other stuff that needs to get done. So I have quite the agenda. But I will try to pop into the chat room here a little bit later on to say what's up to everybody. Take notes, see what's happening in the markets. I still have plenty of business to attend to tomorrow, my friends. Tomorrow morning, bright, early, and squirrely, 9 a.m. Central. We're going to do the morning after live trading session. We're going to be following up on NVIDIA earnings. So we're going to see what happens with NVIDIA and hopefully, be drinking mimosas, popping champagne, and celebrating. But we'll see. All right. So thank you guys so much for hanging out with me here today on Zach's Live Trader. Join us in the chat room. Shoot me those emails, livetrader@zachs.com. Oh, Golden Cross. Golden Cross. Golden Cross. One more thing on Golden Cross. Okay, Golden Cross. Fine. Okay, so here's the thing, Kurt. What Golden Cross were you referring to, man? Because traditionally the Golden Cross is the 50-day over the 200-day. And that's not even close for NVIDIA. But when I like to use it, think of a turnaround stock, a stock that's come down a lot and then has. Well, see, that's the thing, Kurt. So 1 hour Golden Crosses, no, I don't. No, don't give a. I don't give a hoot. No hoots. Zero hoots are given. Kurt, so I don't know. Nope. Because essentially what you're doing is so you're talking about the 50-hour chart, 50 hours of trading crossing over 200 hours of trading. It doesn't hold the same weight, because when you drop down to that period, everything changes. So you're on most charting platforms, your 50-day moving average is a 50-period moving average. On an hourly chart, it's 50 hours, right? Now you can come up with different trading plans for intraday based on moving average crosses and things like that, and a lot of people do it. But in the terms of the grand scheme of the official kind of Golden Cross, that's reserved for the 50-day crossing over the 200. Okay. All right. Now I promise that's all I got for you. I will see you guys in the chat. Thank you so much. Let's do it.